So, Charlie, today we want to talk a little bit about generating retirement income for clients and how we should invest our assets to be best positioned to have a sustainable retirement income plan. We've been getting a lot of questions about the election coming up, all the unrest and turbulence we have right now, and a lot of clients are wondering, how should I be balanced? How should I be invested for retirement? So, can you talk a little bit about our philosophy?
Absolutely. Yeah, Gary, thanks. Glad to do that. I've been hearing some of the same thing. And I think today our position is the same as it always has been. We believe that there needs to be a good mix, a balance of both stocks and bonds in a portfolio. We don't ever go one direction or the other completely. Just doesn't seem prudent from an investment strategy. So, balance and diversification is always important.
Yeah, and the reason we've seen that is important is through the academic research and literature on retirement income, that if we have too many stocks, there might be too much volatility in the portfolio to generate sustainable income. But if we have too much bonds and cash, we're not going to get enough appreciation on the assets for that income to last us for 20 or for 30 years. And the other reason that's important is the inflation component. We haven't had a ton of inflation over the last 10 years, but I know you went back and you have some numbers on inflation that are actually a little bit mind-boggling.
Yeah, that's true. I'm actually going to take a 37-year look back and to 1983. That happens to be the year that my wife Colleen and I got married. And I checked these numbers to be sure. I went back and looked, and the average sale of an existing home was a little over $70,000 in 1983. The average new build of a home was a little more than $80,000. So we think of inflation on a year over year basis, and it really doesn't seem that important. But when you start stacking it over decades, it's almost mind boggling. Those numbers are four times what today for that same housing as it was in 1983.
Yeah, and that is kind of mind blowing because even us financial guys, it's hard for us to get that compounding interest high enough in our head, even at an inflation rate of maybe 3% or so. And I think that's a great highlight of the importance of this balance. We need enough stocks to give us some appreciation over time to keep up with inflation. We need enough bonds and cash to keep us safe when the market is turbulent. And that's really how we approach a retirement income plan.
Yeah, absolutely.
Thanks, Charlie.